Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the bull market. So you can see the situation here has changed drastically on the gold by the comments of the James Bullard, who said that the interest rates could hit up even in this year. So this is very evident hint on changing maybe even the policy, maybe not by some deeds of the Fed, but some rhetoric hints, changing of the statement, preparing for rate change or something of that sort. But even the comments of the Fed representative was enough to change the situation. That mostly is coming because those of you who read our weekly report, in every weekly report, I put the comments from the large banks, analysis of the large banks and broker companies that shows his sentiment to the current situation. And still in the market, a lot of analysis, a lot of big transnational financial corporations who are following the elder driving model, which suggests anemic interest rates, deflation, dovish policy from the Fed, anemic performance of the economy, and a big pack of stimulus. And there are a lot of followers of this strategy are still on the market, but not everybody sees that this driving model is gradually dying. So actually, we're coming in the new stage. And by our suggestion, the evidence should come somewhere in the April. But on the background of the new comments from the board, it seems that it will come faster. And I will not be surprised if the signs will become evident even earlier, somewhere in the March. And definitely this recent comment makes the thing investors, well, in a short-term perspective, today, tomorrow, maybe overall situation will come down a bit. But as investors will sleep with this idea for the weekend, next week we could get the continuation, because you could see what has happened on the interest rates, and with the performance of the interest rates that we see here. So that's the moment where we start our discussion recently, and that's the comments of the Bullard. As you can see, appreciation for 13% just within a few hours. Its performance on the interest rates horizon for the months for 50%. So just recently it was 90 here. Currently it's already 1.3. So it's just outstanding action. And with this performance recently, gold definitely was doomed. So that means that still the grabber that we discussed previously, and the grabber that has worked nice on interest rates, now the gold is catching up with this, trying taking out of these lows, also create some, completing this grabber and creating the new low here. That could make very serious consequences to the overall gold performance, which is definitely bearish. Because on the weekly chart, guys, just to remind you, we have the large ABCD in progress, we have another grabber that's just taken out of the recent lows, this one, and we have the OP 1740. That's actually where we are going to, 1680, 1740 area. That will be next strong support cluster on the weekly chart. That's the target of the few weeks probably. In the shorter term, while market will hit and taken out of these lows, we think that maybe some pause in downside action could happen. Besides, you could see on the interest rates, it's also, you could see some pullback after the recent statement. So, because some speculative company stands here, it's the traders who are just rally up with this action, just fixing the profit currently. So, but in general, the background already was put in a new reality, in a new environment. So, from technical points, you'll recall the head and shoulders that we talked. And currently, market has broken finally the bottom of the right arm, which means the failure of the pattern. It leads to taking out of these lows definitely within a few days probably. and for the downside acceleration. That usually happens when the market fails to form the reversal pattern. Now market's also is dropping below yearly pivot point, which is also a significant sign. On the 4 time frame chart, speaking on the targets, take a look. We have near-term target COP, which actually means the completion of the grabber, and market could flirt around it for some time, showing some wash and rinse of these lows, taking out the stops that have been placed here. Maybe it will be some pause in the downward reaction, some minor reaction. But next will be the OP around 1720. So that's the targets that we have here on the 4 time frame chart. On the daily charts, actually this is the same ABCD pattern. In a shorter term, on the hourly chart, take a look. Once market will complete the COP, we could get some bounce here. So most probable that if bounce will happen, this will be two levels, 18 even and 1811, 1812, because this is confidence. And take a look, this is natural support resistance area. This was support previously, this will dropped, retracement back up to these levels, resistance, and market collapsed. So more probable that retracement will be not very significant, and these two levels most probable that could be reached. Speaking now as setup, and take a look at everything was going well until the board starts talking, and market just was lack a bit of time to complete the ABCD pattern that we discussed. But still, the point from which we are trading led us to move stops to the break-even, because this overall pullback here was not really small. It's approximately for $10-15 per contract, so it's more than enough to move stops. So it was not as bad as actually it could be, because overall context was tricky, if you remember we talked about it in the weekly report. So that's what we have currently on the gold. It seems that market is turning bearish, finally more obvious, and in the current environment, with the picture on the monthly chart, with the on the daily on the weekly chart, and with the erasing of the bullish grabbers, erasing of the bullish context, we probably any upward action currently should treat as a pullback, and expect that more and more investors will start to talk about the new reality, the rising of the interest rates, rising on the attractiveness of the United States dollar and assets in the United States dollar, and more bearish pressure on the gold. Because gold feels good with inflation, but it feels bad with the economic bullish cycle, which is where now stand for. And it seems that the dollar smile that we discussed recently really has the great chance to happen. So let's see how the situation will develop.